Thank you so much for joining us today.
Thank you.
Of course, I first want to touch off on what we saw on the mainland this morning, which were those CPI numbers. And you said tightening is not necessarily a bad thing.
Absolutely. We take a contrarian view. We believe a tightening happening at the early stage of a recovery cycle is actually better for the economy and also lay the ground for a long-term growth of the economy as well as the equity markets. It preempts the bubble forming of assets, equity markets, property markets. So we applaud the tightening, and it's better happening earlier than later.
Now, did today's figures change any of your investment strategies at all?
Well, I guess you tend to agree that it affirmed the view from the market that the government is going to hike the interest rate. Again, we're not surprised and we're prepared for that. And actually, if it happens, it may trigger expectation of RMB appreciation. And if it happens, that will be very helpful for China equities markets, from H shares to A shares in particular.
Okay, so let me just ask you about appreciation and interest rates. I mean, for both of these aspects, what are you expecting for this year? We heard maybe 3 or 2 interest rate hikes this year, appreciation of 2 to 3%. What's your perspective?
Currency?
Yeah, okay, pick either one. You start off with either one.
Well, I'd like to start from RMB appreciation. I think we are a little bit bullish than the street consensus. We foresee a 4 to 6% appreciation of RMB by the end of this year, and it could happen as early as mid this year or third quarter.
It sounds like Dr. Doom, Nora Rubini, said maybe 4% appreciation as well. What about interest rate hikes then? You said you're prepared for them.
Yep. We foresee a 2 to 3 times of interest rate hiking.
2 to 3 times?
And several times of RRR hiking. Yeah.
Okay, so how are you investing in anticipation of these moves then?
Well, we take a very flexible approach. We maintain our long-term value investment philosophy, no doubt about it. In the short term, we lower our net exposure, be prepared for tightening or interest rate hiking. In the meantime, we still foresee opportunities with individual stocks. A range trading market doesn't mean there is no upside momentum for single stocks. So we have laid the ground, have done enormous research to pick stocks.
Okay, and do you have any sector flows right now, any big sector choices, or is it more of a bottom-up approach?
Absolutely. We are still keen on consumer stocks, which we like since last year, and we are keen on TMT stocks. We also like healthcare pharmaceutical stocks because of the healthcare system reform, and we like any platform-type companies instead of product-centric companies.
Okay, so there you go. And buying into A shares or H shares here in Hong Kong then, with those specific sector plays that you mentioned?
Well, interestingly, we see more alpha opportunities with H shares and maybe some higher beta opportunities for A shares. Because some A shares has been traded for a long term at discount to their H share, dual-listed H shares.
They're quite cheap right now, aren't they?
Yeah.
So 17 times of forward earnings. I've never seen the Shanghai Composite that cheap in many, many years.
And they also, A shares benefit first from the RMB appreciation. Direct translation gain from investing into A shares.
Right.
No doubt about it.
But if you look at technical levels, I mean, it looks like the Shanghai Composite might be moving below its 200-day moving average. I mean, doesn't that signal that a bear market is en route? It's
a good point. It depends on your investment horizon. If you're a short-term jittery investor, you may want to wait. But if you're long-term value investors like us, at least you should look at like A-share ETF if you don't have QFII quota.
Is there anything that you're willing to short right now?
Yes. We think any fixed asset investment FAI-related sectors tend to underperform. Like building material makers, particularly those guys traded at high valuation. If their price to book, let's say, traded at 2 to 3 times, we don't think it's justified.
Yeah. What about property then? I mean, isn't that part of the fixed asset?
Property is an interesting question. We take a contrarian view. In the short term, we are cautious, particularly if there is any policy launch after the People's Congress.